This week on Upside, we're looking back at our 2025 predictions, seeing what we got right and wrong. And we've got Dan Gray joining us this week to look forwards and what's happening in 2026. Dan is the ex-head of insights at Equidam, the voice behind Credistic, a Crunchbase contributing author and a prolific ex-poster, writing candidly about venture valuations, fundraising, and what's broken and fixable in VC and private markets. Dan, I'm a recent fan. I've only come across you in the last few months, and I love how you write. Always provocative, always a joy to read. Thank you so much for joining us on our Upside Special 2026 predictions. But first question for you, how would you introduce yourself?
It's a very good question. And before that, thank you for having me. It's a real pleasure to be here, guys. I would introduce myself as someone who is oddly obsessed with venture capital and how it works and the structures and the incentives, and hopeful that things can be done a little better. So that drives most of my writing. I think that's about it, really.
I love it. You're always a little pokey in the eye and always on point. It's a real joy to read. Obviously, we're on the inside of the track, and you're on the outside looking at all the data sets and how things all fit together. And I think you've got just a great point of view. I really enjoy it. Lomax, Mads, how are you find people? Lomax, what's happening with you? What's the latest post Christmas?
I'm great. I took a week off with the kids. And I'm just coming back out of it now. We actually had...
Did you go away?
No, we stayed here. We didn't even come to the UK. We just stayed in Portugal. It was very nice.
How was the
weather?
weather?
Had a lot of sun.
What's the weather like in Portugal in December?
Well, the last 2 days been rain, but actually we had 6 days of blue sky at 15, 16 degrees.
Mads, what's happening with you? How is it with the 4 girls and all the manic stuff that goes on in your house?
It's fabulous. No, it's kind of almost the opposite of manic, right? Kind of really slow down for the holidays. Been cooking lots of food and just enjoying some really nice time with the fam.
Lovely. Well, yeah, same here. I think it was one of my favorite Christmases. It's so lovely seeing the world through your kids' eyes when the magic lights, when they come down the stairs and see that Santa's been. It is very special. But we today are going to be doing 2 things. So we are going to look back at what we got right and wrong in 2025, and then looking forwards for 26 and making some slightly tighter predictions than we did last year. And maybe I'm going to push you to be a little bit stretchy and out there and contentious, and then let's see where we go. But first up, here's one of yours, Mads. So OpenAI loses clear AI leadership. OpenAI is dethroned was the prediction. And now I've put in the commentary that it's wrong. Mads, over to you.
So OpenAI entered 2025 as the clear leader in the AI space. They were first out of the gate. 1 year ago, they were 2 years post the launch of ChatGPT. And in many ways, people thought they could do no wrong. The prediction we had was that would be severely challenged in 2025. And I think that definitely is a prediction that came to pass, maybe more so than Sam Altman would have liked. They started the year as the clear leader. They ended the year in a code red. During the year, they ceded the lead of the enterprise market clearly to Anthropic, that stole a march in them. Google overtook them with Gemini in terms of model performance in many of the benchmarks. Sam Altman ended the year calling a code red and saying it's back to basics. We need to get ChatGPT to be the very, very best it can be and stop all these other initiatives we have because we are at risk of falling behind. So yeah, I'd say that's total vindication of that prediction, and I think very much came to pass.
I'm with Mads on that. I think they started the year well. Remember, they announced that $40 billion round at the end of March in 25.
They announced Stargate, $500 billion agreement at the start of the year. Lots of people jumping on the bandwagon. Oracle being one of the big people as part of that alliance. Yeah. At the end of the year, come Q4, everybody in the OpenAI orbit got hammered, including some of these public companies like Oracle that got absolutely destroyed share price wise for that alliance.
Dan G?
I'm with Mads and Lomax on this. I think the lead that they had does appear to be evaporating, and not only to Gemini, but I think they don't have as clear an answer as they might like to some of the open source models as well, which are very competitive. So it seems like trouble for them.
Yeah, I love the cat and mouse.
I'd love a penny for the thoughts of Josh Kushner now, who's basically bet his firm on OpenAI, right? I think it's very interesting.
Right, next one. Number 2, 2025. Now, this is Andrews, who's not with us today, but 2025 is a decisive year for China-Taiwan trajectory. I've noted this down as wrong. I didn't see any material escalation or strategic anything towards China-Taiwan, but anyone got any more thoughts before we move on?
There was the recent exercise, I think just after Christmas, quite a large Chinese military
live
exercise
firing.
around Taiwan. Yeah. So that's probably the most significant thing.
Maybe we'll put that in the mid camp.
If anything, you could maybe point to wider problems potentially in the Chinese economy, which then push Xi into finding distractions from that. But it's not a material shift, I'd say.
Number 3. Now this is actually a bad prediction because we couldn't measure it, but Taiwan likely to be absorbed by China within a decade. So that was number 3, but we won't do any more of those today, and I won't ask any commentary around that. So number 4, this is one of yours, Lomax. Defense tech investment surge continues in 25. I've put correct.
For sure. We had big poster child. Helsing got to $12 billion valuation in Europe. And Euro is now valued at 30 billion, although I've heard from spies that it's more like 50 or 60 these days on some deals. And the amount of capital invested has doubled from 24 to 25. So I think this has continued. But 2 things are happening, prompted by Russia and then what the Americans have been doing vis-a-vis NATO, is budgets have been increasing, and that is a kind of secular change. It's not actually overnight. Like the UK's increase is not actually going to kick in until 27. And actually, if you read what the generals have been saying, the UK hasn't increased spending at all last year. So actually, that hasn't happened, but that will happen, and that will continue to happen. Secondly, there's this whole we are now ripping up the kind of taking $50 million tanks into battle, and now strapping together drones and being much more scrappy about it. So the whole move to autonomy for unmanned systems is changing warfare. And so there's the technology shift, and then there's the geopolitical shift at the same time.
Number 5 was Europe, UK forced towards tech sovereignty vis-a-vis AI quantum space. I've put correct, but not measurable. So I think, I don't know if anyone's got any commentary on that, but I think that is yes.
No, but you can point to the Germany looking to increase its investment hugely here, right? And taking the fiscal handbrake off, which it did historically this year, and a lot of that money being earmarked for infrastructure and sovereignty. And there's a bunch of investments that have been made. I mean, the BBB made £100 million commitment into SV Health, like one of the big biotech funds. So in kind of going into sovereign, I'm including biotech in that as well.
Number 6 was space enabling tech keeps attracting capital. Lomax, another one of yours? I put as correct.
Yeah, for sure.
Yeah, I think it's still a hot space. Number 7 was US recession in H2 25. There was no recession, Mads. This is one of yours.
No, 100%. I think, everybody in an economics bent sort of got schooled a little bit in 2025 because there was a lot of expectation that some of the belligerence around trade policy coming out of the US administration would lead to a recession in the second half. We saw contraction in the first quarter of the year, but actually the economy has been performing strongly Q2, Q3, and likely also Q4 when we see the data come out. Overall, there is a lesson here that tariffs and some of the slightly more belligerent tone in trade negotiations didn't need to herald economic doom, maybe to quite the same extent people were expecting. Now, a couple of aspects to that. One is, yes, the U.S. government is still running a fiscal deficit of 6%, which is unheard of in peacetime. And of course, that is part of what's propping up the economy. You have those massive fiscal stimulus being pumped in. But on the other hand, you do see a Chinese economy that is having world record export numbers, 1 trillion trade surplus.
And growing,
right? And I think you're going to see in 2026, maybe we'll come back to that, probably a change in posture around the European approach to tariff and trade.
Yeah, that was the one when I was looking through our notes. That was the one I think we were all in agreement with. I think there will be more. But anyway, 2026 shortly. So number 8 was stock market correction early 25, which we were kind of correct in. Mads, Lomax, that was one of yours?
We saw a big correction around the, first we saw, of course, we saw one earlier in the year, right? When there was the whole DeepSeek debacle and a massive drawdown there in the NVIDIA and some other big shares. But then they started growing again after that. And then April came the quote unquote liberation day. And yes, we did see a drawdown of plus 15% there.
He liberated lots of people's wallets. Well done.
Well, not to do myself down, but what I would say is I had thought that the drawdowns in the stock markets would be more profound than they were. I mean, I know they were big, but they were very short. So we were kind of correct-ish, I think is what I would say. Or at least I was.
Yep. Yeah, agree. Number 9, M&A activity rebounds in 25. I put this down as a correct, Mads.
Yeah, we saw lots of deals, lots of big deals being done. Second biggest year on record for M&A. So I think that's
Jesus, Mads, you look like a genius. With Wiz was
Yeah.
announced very shortly after we did the podcast last year, right?
He had the inside scoop. He was there.
And then we had the
year
year-end bookended with Grok. So you had Wiz at the beginning and Grok at the end. That's 50 billion of M&A across 2 deals. Pretty impressive.
And just think we knew all of that in advance. Can you imagine?
Unbelievable.
Yeah. Number 10, last but not means least, Lomax, one of yours. The IPO window meaningfully reopens. Again, I put correct-ish.
Yeah, it opened. It wasn't an overwhelming IPO boom, but definitely it was like proceeds from IPOs in 2025 were up 40% from 2024. And we had, again, going back to poster childs, as always happens in tech and VC, we had CoreWeave, Figma, Circle, and Chime kind of leading the charge. So that was great. One thing to note, the bar is incredibly high now. The average revenue for tech IPOs in 2025 exceeded $800 million revenue. I mean, do you remember back in the day when it used to be get to 50 million or 100 million and then you can IPO a tech company? Not anymore. And actually, if you think about it in the European context, like how many European companies actually got 800 million of revenue? Like hardly any. So it's a bit sobering, that's for sure.
Let's get into 2026 predictions. Thank you, gents. I think we were mostly right. I mean, not to blow hot air up our own backsides, but that wasn't terrible. But we are going to be more specific and more precise for our 26 predictions so we can measure and then come back the end of next year, the end of this year. We're not doing it. It's the 2nd of Jan already. So, Dan G, first up for you, European Re-industrialisation is the title of your prediction. Unpack it for us.
Yeah, let's see if I can torpedo your score for the next recap of predictions. Yeah, my predictions generally, I think, are on the optimistic side. I'm trying to manifest a little bit. This particularly is like looking at mostly at recent activity in Germany, particularly around Munich, Bavaria, where a lot of the big industrial families have started putting more money into kind of direct allocation to innovation. And this has happened primarily with TUM as kind of an intermediary in the process. But it seems like a very sensible and rational thing. You know, a lot of the kind of traditional industry in Europe is very worried about China and remaining relevant and future growth. And in order to dig themselves out of the hole that they've got themselves into, they need investment. Perhaps VC hasn't been the best partner for that particularly. So the growing role of family offices, I think beginning in Germany, but probably spreading across Europe, if things go well and people are sensible.
Gentlemen, what would you pick up on, embellish or challenge? Mads?
I think that's probably right.
How would we measure this then, Dan? If we were to come back at the end of the year and go, Europe has been re-industrialized, what's the measurement stick?
I think you'd look at it from a supply perspective. So looking at what's happened at TUM in Munich, is that emulated elsewhere across Europe? That would be great to see. Are there more kind of family industrialists across Europe who do more direct allocation to venture? And then, of course, the other side of that is how much ends up being raised by kind of more industrial tech across Europe.
Lomax, any thoughts?
No, I think you're spot on. I think I would just say, the family offices, it's more like a 24-month prediction potentially than 12, but for sure.
Yeah, we're still kind of baked in inertia. My gut feeling is that there is an accelerating force now, not only in sentiment, but actually in actual activity, but I'm always the more positive person on this podcast. Number 2 is one of mine, and mine is a broken record because I'm bringing back one of our conversations from a previous podcast, which I think I've repeated at least 5 times, which is that Apple will win personal AI. They will get Siri to bloody work. The reason that I'm saying that is now they're working with Google. Who knows how that's going to manifest and where the moving parts will land, but now they're working with Google on device with models that now work on device. They can connect their closed ecosystem, own the ecosystem. They've got so much money. They are under such pressure. I think the driving forces are now good to go. And I think 26 will be their year. So don't write off Apple with regards to AI, but only within the personal co-piloting, which I think is going to be a massive space. But that's my prediction. That's number 2. Any thoughts, challenges to that?
I totally agree. I think a lot of the criticism that Apple's had in the last couple of years really misses the point of how early all this is for consumers. It's far more important for them that they get it right than that they're early to it.
I think it's a brave prediction around a company that basically has never really managed to make any software beyond device drivers that's good. I think the operating system is really good, but that was acquired with Steve Jobs and Next. And since then, I mean, their software credits are just not really there. So yeah, for them to become the leader in anything that requires software, I think feels like a bold prediction, but we'll see.
The only thing that always bites me is they're so bad at doing synchronized services. They're so bad at anything that needs to do anything across the internet to connect your device to some kind of server and back. And so I have a bunch of fear that it won't happen, but I'm going for it. I've said it before, and I'm going to put it in writing now. That's number 2. Apple is going to win with Apple Nintendo. Well, I've put it here. I've written in my notes here that the all-in boys rave about it because they're so down on Apple and everything's shit and so my yardstick will be if Calacanis and the boys say this is an awesome thing. I think that's the green tick.
That's fair.
I'm going to short that trade. I'm against you on this one. I think Mads is totally right, and I think the innovation will come elsewhere.
But it's Google. They're going to use Google. They're moving away from OpenAI and they're using Google's new model, which is like small enough to fit on device. That to me is the crossover. But we'll see.
Okay, but so just unpacking that. So what we're saying is they will win by capitulating and using Google software.
Yes.
Listen, yes, I agree with that. I'll take
that. To put that in context, I mean, when the iPhone came out, there was hardly anything in there designed and built by Apple. It was all, Sony's this and Samsung's that and whoever's the other. I mean, they were just a fabrication plant in Foxconn. Anyway, I'm spending too long on Apple. I'm a fanboy, so excuse me. Number 3, one of yours, Mad. So 3 major tech IPOs. I had some IPO action in some of my other notes, but this is yours, Mad. So 3 major tech IPOs: SpaceX, Databricks, Canva, and Anduril, and Anthropic. So 1 of 3 out of those. Bring that to life for us, Mads?
Well, it tried to up it a little bit and sort of say 3 out of 5, right? So we've had too few tech IPOs since 22. There were a few more in 24. The market did open. We saw some good ones come out, but there's a lot more that could come. SpaceX, an exciting valuation at $1.5 trillion. We unpacked it in one of the previous pods, maybe a bit pricey. Anthropic, listen, I'd take Anthropic at $300 billion, $350 maybe even. Oh, absolutely. Listen, you're looking at a company that went from $1 billion at the start of the year to $9 billion recurring revenue now. They're have a commanding lead in the enterprise market. Everybody has been going absolutely bananas over the last few weeks over just how good Opus 4.5 is. It's unbelievable. I mean, people are saying, yeah, maybe not AGI, but this is as close as damn it. I mean, it feels like it. And, you have a company that's at $9 billion now, could grow to 20, 25, 30 billion at the end of the year. You're looking at 10 to 15x revenue at that growth rate. Why not?
Yeah, maybe not a bad punt. Any other thoughts or commentary on the IPO opening?
No, just that I think it's really, really exciting. I mean, if you can get 3 out of those 5 out, you are looking at a very, 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 very exciting market.
There's lots of noises, isn't there? There's a bunch of IPO noises.
Yeah, I mean, also don't forget about this. Like one of the biggest problems we've had since 2021 is the lack of exits in our industry. I mean, they'll be subject to lockups, but within the kind of 12 months afterwards, that's a lot of capital flowing back to limited partners or venture funds who can then reinvest that. I mean, there's a lot of LPs at the moment in venture who are sitting on their hands waiting for capital to come back before they reallocate.
Dan, this is one of your talking points, isn't it? Like looking at how kind of money flows. Any thoughts on this?
It's a rotation. Sorry, Dan. Sorry. Yes, it's a rotation from those who've been, sponsoring these as private investors into the public investors, which then frees up private investors again. So anyway, Dan, sorry.
Yeah, I was just going to add, I think generally what you see is the first one out maybe has a bit of an advantage. They capture the sentiment a little bit more, but you will see clustering after that as well. Like if Anthropic goes out first, the other big AI, IPO opportunities are likely to follow soon after, I think. And then there's 2 interesting things that happen after that. One is typically after IPO, there's a bit of a surge in M&A because they have much more cash to play with. They have liquid stock to use. So that's a possibility. And the other big question, I think, is just like how well do these companies fare in public markets? The lockup is a problem. They may have a ginormous pop to begin with. Is it going to last? What's their stock price going to look like 6-9 months later?
Interesting. 4, Lomax, one of yours. Biotech comes back from the death.
There's a good article, I think, in the Wall Street Journal over the holidays about the US biotech industry in particular. There was a huge flood of money that went into biotech and health tech during COVID, which was partly low interest rate, just lots of money in private markets, and partly just people getting excited about health because of what was going on with COVID. Since then, there's been a huge drawdown, and biotech has actually been absolute desert. Digital health was also massive desert. Hims and Hers was right down, for example, just as one of the kind of marquee D2C digital health companies, right down at the floor. This has started to pick up, as I mentioned when we did our 2025 review. A few different factors at play. So number one is the GLP-1s, so the obesity drugs, or diabetes and obesity drugs, have been a real shot in the arm for the industry. They've been both good and bad, a bit like AI. They've been a shot in the arm for the industry, but they've also sucked oxygen away from other things. Let's just look at stepping back at the numbers. The XBI, the S&P Biotech Index, entered 2026 on a major rally, right? So it's up 75% from its lows in 2025. So the industry started to recover, but I think this will continue. Right, there's momentum there. The other things, there's a couple of kind of specific areas where there's a lot of interest going on. Is at radiopharmaceuticals. So this is the new frontier in cancer treatment with massive investment flowing into companies that can deliver radiation directly to tumor cells. So there's those specific areas of interest which are starting to get momentum, and we'll have big readouts this year. Lots of people have been excited, and you've had lots of Silicon Valley folks saying, "Oh well, we're going to end cancer in the next 5 years with using AI." That's total gibberish. And actually, AI for drug discovery as a category has really suffered in the last few years. You look at Recursion, which IPO'd, is now, its stock price is well down. Exscientia was a big IPO'd UK company, which ended up being bought for stock by Recursion as the two poster childs in that industry. However, last year we had In Silico, another company that working on AI drug discovery, crossed a watershed and had one of the AI designed drugs crossed phase 2. So one of the kind of later stage clinical trials in humans and showed efficacy. So that will actually come to market very soon. So that's very exciting. That's the first AI designed drug to come to market. And there will be more and more and more of those. The final thing I would say, which is very consistent with what's going on in AI, which is that having watched, and Mads really hot on this, having watched what's happened with the open source models in China, really disrupting the closed source models in the US. We talked about the US CEOs going to China and having sort of PTSD from seeing all of these factories are the future. The same thing's happening in biotech. China is now stealing a massive march on biotech, and that is going to continue. Now, one thing I predict is that something similar might happen in biotech, and the US will kind of realize, we're being surpassed here, and we need to invest now. So you might this year, like biotech has been low down Trump's agenda, but I suspect that maybe if they really realize how far they're falling behind the Chinese in terms of new drugs, new treatments, and you want sovereignty over that, ideally, given the new world that we live in. I do think there's going to be a huge kind of sovereign push in that, which will then also boost what I think is going to be a kind of momentum play for this year.
Have you read Breakneck by Dan Wang?
No. So sorry to put you in. Tell me, enlighten me.
No, he's I'm only halfway through. So he is Chinese national, I think educated in the States, but spent most of his life in China. And he's written this book called Breakneck, which breaks down what's really happening behind the curtain. And it's just a fascinating insight. And his take is there aren't that many industries that can't be absolutely owned by the Chinese, if not already owned by the Chinese. But his one caveat was that there's very few scientific discoveries in China because they haven't focused much on the science in bio and pharma and health. So what they're doing, they're still leaning on lots of foreign discovery, all of the back office that's going on, and then doing the Chinese thing around it. But it was the one sector. So I was looking at the Chinese versions of SpaceX and how close they are to Elon's outfit and what's happening with that. And it's super, super close. So obviously, we're going to come on to tariffs and other ways and other protection mechanisms across the world to stop some of this kind of Chinese influx cross-sector. But it's funny you're talking about bio and China. It's the one space he thought they just didn't have quite enough science in. I have no idea if that's true.
Yeah, but I don't know when that book came out. And if we'd had this conversation a year ago, you might be like, oh yeah, that sounds right. But forget about that. Rip it up now.
I think it was 24. I think it came out in 24. I think it was written in 23.
Because what happened is, first it started off with what we call CROs, clinical research organizations, which do the actual, you kind of outsource. If you own the IP and you've done the kind of core experiments, you then outsource the kind of the manufacturing, the scale up, etc., the production to them. Chinese kind of like mastered that. We have some big CROs came out of China, which is kind of very consistent with the manufacturing wave that we saw. But now actually core IP ownership is being developed there. It's
local.
It's staggering. Yeah. It's literally
that's
staggering.
What they did. That's what they did with Tesla, right? They catfish Tesla in there to then get all the local companies fighting and producing for Tesla. It's just a really smart thing to do, and I imagine they've done exactly the same thing with Bowyer.
So I think it's one to watch, but I'm excited about this year. in the context of biotech. This is mainly biotech rather than like digital health, which, maybe talk about in a minute.
Lovely. Number 5, Dan, one of yours. I hate this one, but we're going to go for it anyway. Politics kills the 28th regime. Tell us more.
Yeah, so the 28th regime, for anyone not familiar, is this EU Inc. idea of having like a single incorporation standard that works across all of the EU, which would involve harmonizing things like capital requirements, notary requirements, all kinds of very unpopular and complex stuff. It's a popular idea because it would make it easier for startups, it would make it easier for investors, lots of good kind of growth arguments for it, but it does seem potentially impossible. So the other side to this, which seems like it makes too much sense to actually happen, it's like
That's a great caveat, and I love it.
Yeah, it seems unlikely, but it also seems totally logical. Is the EU is developing this new digital identity wallet. It's recently been kind of expanded to include like business identities and associate the founder's identity with the business, and you can do qualified digital signatures with it, which in theory means it would be very easy for anyone anywhere in the EU to incorporate in any jurisdiction and run a business from anywhere. So rather than needing like a single incorporation entity that is kind of harmonized, you just make it kind of a competition. You can incorporate in any jurisdiction based on whatever priorities you have, and that itself kind of smooths the process, and it makes it more competitive and presumably leads to a better environment across the whole EU.
Mads, any thoughts?
So wait, I'm trying to work out what it actually is we're saying. So firstly, I think this is a great idea. In many ways, it's more similar to Delaware than the 28th regime is, because what we're saying is, look, it's not that we're creating a new regulatory regime that sits outside of the national regimes. We're just saying they can all compete, which I think is great. There will be a lot of legislative initiatives required to enable this in all the member countries. So this is not going to be a simple thing. And I'm just trying to work out, are we manifesting or proposing that this is something we would like to have happen? Or are we saying we think this will happen?
I think, it goes back to like my slightly optimistic predictions. I like to think this is something that will happen, which maybe isn't the same thing as a genuine prediction, but I would like to see it. I don't think it's as complicated as it might seem. A lot of the groundwork seems to be there through what they're working on with this digital ID wallet and how they've expanded it to encompass businesses. I'm not sure what the missing piece is, and maybe that's going to be clarified a little bit over the next few months. There's going to be
I think
more
you're going to have
from the
exactly the same brigade that doesn't like the 28th regime, which is going to be unions that are worried that people can incorporate in other countries, and then it's all these neoliberal, terrible capitalists that are out to get you. All this stuff. You're going to have exactly that same brigade man the barricades again.
But as far as I know, like you may know this better than I do, it's already kind of legal precedent in the EU that any member state has to recognize businesses incorporated in any other member state. So it doesn't matter where you're incorporated, you can operate in any EU country effectively.
Yes, the challenge is when you get down to brass tacks and you then have to make a filing, you have to employ somebody, you have to do something, you're suddenly subject to the local legislation. I mean, let's take the example of financial regulation. Now, I might have a business. I might have an investment firm that's cleared and regulated to raise capital and invest money in one country. And I might go to another country that says, well, yes, you are sort of following the directive, but our interpretation of that directive is a little bit different. So we're sort of gold plating the requirements here and saying that you have to meet a different threshold. That then means you fall back into the national legislative framework because we are the only ones who are having a threshold that's high enough to clear this bar here of our interpretation of the directive. And so you have a million of these little barriers. I mean, this is the whole problem of the single market, is you've got all these barriers everywhere. And I think unless, that's what I've been talking about, this enablement that you need to have happen locally, unless you actually do that, unless you start to take on the local regulators, I think it's, you're still going to be, businesses are still going to be stuck in the morass.
Dan, I'm gonna keep it, and we're gonna own it, and we're gonna manifest it. So it's all good. Don't worry about a thing.
Yeah, fingers crossed.
6, Chinese open source AI hits 60% of downloads. This is one of yours, Mads. So we're going for a 60%. This is a very nice, easy, measurable thing. Well, he says. I don't know how we do that, but sure. Go, unpack this.
Yeah, so we've seen incredible advances from Chinese open source models in 2025. We started the year with DeepSeek throwing a fright into everybody, and Chinese open source then went from strength to strength, capping out the year by some measures at 44% global market share. We've also seen comments out of Andreessen where they were saying sort of more than 70% of startups coming to us are using the open source models as primary engines or as important engines as part of the applications they're developing. So there's just a lot of really cool open source stuff happening. And the question is, I mean, this is back to we're talking about the IPOs earlier on and what is Anthropic really worth? I mean, the big threat for them is, look, if I've got an open source model performing at 99% of my performance, can I maintain the pricing power I need to keep growing the revenue at the pace I'm doing right now?
Any thoughts, challenges, chaps? Dan, anything on this for you?
No, I broadly agree. I think it's a good prediction.
Lomax?
No, I think Mads is spot on, yeah.
Number 7. So this is high-end longevity clinics. Just to read out your specific. High-end longevity clinics move from boutique to mainstream infrastructure is the posit.
Yeah, but the global longevity biotech market hitting 30 billion at kind of massive shift towards subscription-based health. So we saw this year. We had Neko launched in the UK. You've had Function Health in the US on a tear, I think at 200 million of revenue now, and just raised a big round at 2 billion. These are, just for a reminder, these are physical clinics where you go, you have a checkup every 6 months, every 12 months, which have a different model. They generally do your bloods as the core thing, probably 100 biomarkers. Some of them will check for various different cancers in different ways if they can. So skin cancers, they might give you what's called a ctDNA test, which scans for circulating tumor in your blood, which will pick up any early stages of solid tumors, which is 80% of cancers. There's kind of move to proactive preventative health that people have talked about for the last 15 years. Because the historic model was just, you get sick, you go and see a doctor, the government or your insurer pays for you to get fixed. But moving away from that, very weirdly, like incredibly slowly, and this is why I'm sort of saying it's going from boutique to mainstream. I think this does take
But what's
years.
mainstream, Lomax? Because this is still the purview of people who have enough disposable income to spend X on scan Y, right?
Well, that's why
mainstream?
I quantified it in a way of measuring it. So subscriptions to longevity health clinics grow from roughly 250,000 globally to 5 million. So you have a kind of 20x increase. And that's not mainstream. That's still only 5 million people, but I think it starts to be a little bit more mainstream. And I think if you look at dinner tables around the country, it starts to become more and more of a common thing that people are discussing and measuring. It started on the lips of VCs 10 years ago, and it's now starting to percolate through a little bit more into mainstream society.
Dan, do you use Nico or any of the other scanning shops?
I do not.
No,
There's nothing around here anyway.
Yeah, you're in the
well, and this is what I say.
fields of Wales.
This is not just, and this is not. I would say this is not in isolation from what's going on with LLMs at the moment. Because I do say, if you don't have one of those clinics near you, and this is not how we talk about often here, we talk about not investment advice. This is also not health advice. But what you will have, Dan, is you'll have a lab near you. You can walk into the lab, get them to draw the blood,
or you get them to do the finger pricks, and then you just lob all your data into Gemini, right?
Yeah, well, I wouldn't do the finger prick because you need a venal blood draw to really get the data for proper biomarkers. But so that's one piece of advice I would say. Don't listen to Dan on that. But but actually walk into, and they can just send you, and then you chuck the PDF into LLM and you have a conversation with them. That's in a way is like running your own Nico Health model. It's probably going to cost about the same because you won't get the kind of economy of scale when you go and get the blood test. They have to go and pay for the lab test. But ultimately, with LLMs, you can be much more proactive about your health. So actually, it's not in isolation from AI.
So I got 2 questions for you. Will people be more proactive?
Well, I think
that leads into your mainstream.
Very slowly, and I think this happens from generation to generation. And you can see it. There was an article in the FT talking about the massive reduction in alcohol drinking that's going on in the example, the UK at the moment. Now, maybe that's driven by a little bit by cost of living, but also I'm sure it's driven by health conscious and younger people being more health conscious.
Next up, one of yours, Mads. So the EU will announce new or expanded tariffs on Chinese goods beyond the current EV tariffs in 2026. I had the same one in my list, but I'm bang on with you on this one. Unpack this one for us.
It's just coming back to what we spoke about earlier, that I think there's a little bit of maybe of humble pie that we've been eating in Europe over the past year because, there's been so much dislike of Trump and everything he's been standing for. And so he's been talking tariffs. And so everybody's been saying, well, tariffs they're a bad thing. Well, maybe they're not as bad as people were thinking. The U.S. economy has certainly been performing better than people have been fearing. Meanwhile, we know that the European industrial heartland is under attack from Chinese exports. We know that the Chinese numbers are better than they've ever been, and that especially automotive is a real sore point for Europe. So there are already some tariffs on imports of automotive, but I just think that they're going to be expanded either in terms of the percentages or in terms of covering a bigger part of the supply chain to simply cushion some of the very real issue there is around exchange rates, because there is a significant undervaluing of the Chinese currency, which is impacting the ability of Europe to be competitive for some of these things. And I think that could be used to bring the tariff discussion back into the forefront.
Mads, another one of yours. So AGI, we will not see AGI 26.
There's no real consensus of the AGI definition yet. OpenAI, they're talking about economics, and DeepMind, they're talking about levels. And Jan LeCun from previously from Meta, he's just rejecting the term entirely. But I think there is a sense that, or there has been a sense that we were chasing this notion of AGI, so a model that could sort of do everything that a human could do, but better. And what we instead have seen is we've seen models become exceptionally good at doing more specialized things like software development, where they are right now just frighteningly good, and we know this is the worst they'll ever be, and they're already so good that even top developers are saying, well, they're just not coding anymore. They're steering the models, they're working with them, but writing the actual code is something that you may not need to do. This is not pervasive, and I don't think it'll be pervasive in 2026 either. We're not going to see one model to rule them all and to do everything, but we're going to see models become increasingly excellent at many, many different disciplines. We're going to need things like decision traces in enterprise, where many pilots have failed because we've been able to use models, but they're stochastic, they're random in nature or probabilistic in nature. And so, how do you know whether what they spit out is right or wrong? So what we've been lacking is not kind of the model intelligence, it's the judgment to say whether the model is right or wrong. We're going to see a lot of evolution in 2026 to make that judgment better, whole new parts of the software stack to address that. In the real world, the physical world, kind of physical AI, as we also talk a lot about, you're going to see evolution around world models, something Jan LeCun has left Meta to pursue, and many others are looking at. How can we give models spatial intelligence? How can we bring them beyond just understanding text, but actually understanding the world around us? So we're going to see incredible advances, but it's not going to lead to one model to rule them all. It's not going to lead to AGI in the year ahead.
Will a world model, Mads, maybe an unanswerable question, will a world model, whatever is the next beyond LLMs, will that get to AGI? Is that enough?
Possibly, but not in 26. I think we're still some years away from that. But we're going to see, again, incredible advances. So one of the big things that people may not appreciate is just how far we came in 25. We started 25 with questions about scaling laws. Will LLMs be able to continue to scale the way they were? And people were saying, look, we're running out of internet data. We don't know whether the models will keep scaling if we just throw more GPUs at them. Well, it turns out, if you look at software development specifically, Anthropic, they just came in with the model released, Opus 4.5, and absolutely blew away the standard for how good models could be, in a way that means that we are on trend to keep improving model performance exactly as fast or faster than we've been previously. So amazing strides. Now, models can now do 4 hours of work, or more than 4 hours of work, reliably up to 50% of the time, right? So that means you send a model off to do agentic coding, and it can complete a task that a human software developer would spend 4 hours doing reliably 50% of the time. Now, you might say, well, why is that good if it's just 50% of the time? Well, that's up from a fraction of that earlier in the year. So as the model keeps getting better and better, we could be as high as 13, 14, 15 hours by the end of 26, right? And that really goes to show just how fast these models are developing.
Danji, how in tune are you on the AI side, or are you mainly on the venture and the private market side?
Fairly in how it relates to that. So on this topic particularly, I think if you go back to 2023, a lot of the language then about AGI and what it would mean, and like the imminent threat to jobs and all kinds of things, in hindsight looks a little hysterical. But really it was serving a purpose of like lowering the cost of capital for developing these companies. That was what it was doing. Sam Altman was doing tours of the Middle East talking about the threat of AGI just as all the big US VCs were going over there to raise money, coincidentally. So I think that is a part of where all of this comes from. I'd like to see a little bit more accountability for it, frankly, but it seems unlikely. But as a small bonus prediction about next year, I think once these companies go public, particularly the big model companies, all this talk about AGI is largely going to go away. They'll be talked about like kind of super SaaS.
Interesting. I've always thought it was a little bit. I mean, I listen to Eliezer a lot and some of the doomers, so I kind of keep my ear on, even though I don't think what they're talking about will materialize. I keep my ear out just to have a balanced opinion on both sides of the fence. I think that's spot on. Lomax, anything from you on this one?
No, I mean, again, as Mad says, there's no sort of dictionary definition of AGI, right? Everyone has their own interpretation of it. I think whoever's interpretation you take, it's still some way out. It's a very scary prospect for when it happens.
If right? I mean, if it happens, I think vertical.
And in what form? And in what form? And how?
Yeah.
And in what form it happens? And I think one thing we maybe haven't talked about enough today, and I know Mads is a big fan of this, or he touched on it, is what we will see more and more is sort of AI reaching into the physical world more this year. That's a big. I don't know how you quantify it. You'll certainly see some big funding rounds, which you've already seen last year. But this sort of physical AI wave is gonna continue and pick up from where LLMs left off.
No, I totally agree, especially across Europe. I mean, it has to. We kind of have no choice, really.
Well, I don't know if you say especially across Europe. I mean, the US has the same problems, and the US has more money and is more willing to sort of swing for the fences. Sure. So we talk about all the successes we had in Europe last year, but the US was like exceptional last year, and actually,
it's 10x, right?
Yeah, which is normally 4 to 5x. So. I know Europe has to do these things.
That's my point. We have to. We need the efficiency and productivity. We have no choice. So it feels like we are going to be focusing on how we can get more manufacturing, supply, construction, all of that good stuff happening across Europe. Right. Last and not least, number 10, one of yours, Lomax. So cyber. Now, I had on my list that we would see at least one massive AI, enterprise level, AI driven cyber attack that made the BBC news. But your title of your item was cyber continues to become a clear and present threat to society. Take this one away.
Yeah, more doom, I guess, isn't it? We've gone from doom to doom. So look, last year, cyber has again played a pretty big role in society. You had big cyber attacks, JLR, Jaguar Land Rover in the UK. I think the government had to step in with a 1.5 billion kind of guarantee to suppliers. M&S, Marks and Spencer's, the online retail chain, I think lost 300 to 400 million through a massive cyber.
It felt like there was a lot more in 25. It felt like there were a lot more.
Don't forget, also, people haven't forgotten this. And the biggest M&A deal we talked about earlier, Wiz, 33 billion in Q1, was also driven by cyber and security, right? So that's been the backdrop, but I think this will continue. The problems will continue. So, cyber becomes a tool of statecraft and not war. In a way, it's if you're a bad state actor wanting to cause damage to third parties. I mean, we've seen this before, but this is a great way to do it because it's below Article 5 thresholds. It provides you plausible deniability. You can always just say it wasn't me. No tanks, no missiles, no people getting killed, or at least directly. And it's sort of perfect for people who want to leverage without war. So I do think, and at the same time, two more things. Systems are not up to scratch yet in terms of resilience. And the third is AI lowers the cost of reconnaissance, phishing, persistence. That means, you can do more attempts, more patience, more kind of, you can just keep going. So I think it's all these trends are feeding into it. So how do you measure it? I think a tier 1 economy, so US state or a EU member experiences a major grid failure. I'm going to go for the grid failure.
Grid failure, you're going up to the top.
Lasting more than 72 hours. You might laugh at me when we do this one, but
Well, this was obviously inspired by your blackout of 25.
Well, we had the blackout, which we all say was actually more down to incompetence rather than to
rather than down to Russians.
Exactly. Yeah.
Mads, what was on your list that we didn't? That's our 10. Thank you, gentlemen. Mads, what was on your list that you're irritated with me that we didn't cover?
No irritation at all. I think there is, as we talk about physical AI, one of the places where we're going to see that the first is in Robotaxis. Waymo has been extremely exciting in 25. They're going to come to London in 26. We've seen them test drive in the wild here in London. I think that's really exciting. Clearly, Tesla would like to catch up. One of the predictions I have is that they are going to make inroads in 26, but they're still going to be behind Waymo. So when it comes to those two American giants slugging it out, Waymo is going to stay ahead. But China is going to leapfrog both of them. Today, Waymo's probably pulled ahead of Baidu in terms of weekly rides, but there are several competing operators in China We're already seeing them in more cities. We're seeing them at lower cost. We're seeing a more permissive regulatory environment. And so I think while Waymo is going to stay ahead in the US and in the West, I think China is going to pull ahead globally when it comes to robotaxi rides in 26.
Dan, what should we have picked up from your list, or what else would you like to add, or any other thoughts you'd like to throw in before we close off?
I think the only remaining thing we did actually kind of cover in the aggregate, which is related to the industrialization of Europe, or the re-industrialization, the direction of AI, and this thought of how Europe's future may be more on like the inference side, the on-device side, doing more interesting things with, smaller, leaner models with an industrial application, rather than the bigger, more expensive, more general models.
Yeah. Yeah, and I'm a big believer in vertical applications. I'm a big believer in this problem is solved with this vertical stack rather than it trying to go horizontal. But we'll see. Maybe that's another part of the AGI conversation.
I think it totally is, Dan, and I think you're absolutely right. And one of the reasons why applications are so important is because when we talk about decision traces, so codifying not just what decision was made, but why it was made, having an opinionated structure around what the LLMs spit out. And just remember, they're probabilistic. They will give you something that sounds right and could be right, but we don't know whether it is right. Let's take the example. And today you have, massive sales teams that run deals with customers. So much of the decision making that happens is codified in people's heads, right? Why are we giving this discount to this customer? Well, there are many little reasons, and that's the discount we gave last month, and this kind of makes sense, and they're in that industry. It's not written down anywhere. Now, the LLMs, they can't touch that today. You need the application scaffolding, the decision traces around why something was decided at a given point before you can let the LLMs loose. So that's why I think we're going to see so much many advances in applications also in 26, because only with those decision traces, only with that scaffolding on top or around, can you make the LLMs really do the work they need to do in a not just probabilistic, but actually deterministic way, which is oftentimes how business has to be run.
Well, I am just stoked we didn't end on a bummer. Thank you, gentlemen. Any other final thoughts before we close off and see into 2026? Can't believe it's here already. Any other thoughts before we go?
Happy New Year.
Yeah,
What a great
baby.
thing.
Yeah, and Dan, thank you so much for joining us. That was a gift and a pleasure. Unless anyone has anything else to say before we go, we're going to call it a day.
Bye-bye.
There we go.
Fingers
Bye-bye.
crossed.
Consider it done.